And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, January the 4th, 2024. I'm going to begin here with the S&P. I'm going to start on the 4-hour chart. The S&P is still best counted as being within a minor fourth wave down. And while I did indicate on last night's update that if need be, that the minor third could be moved down and placing the minor fifth wave here. And that still may be the case, but it's going to depend on how this all unfolds over the next few days. So we just today came down below and closed below 0.236% for the fourth wave. So even just measuring out just normal fibs for a fourth wave would suggest that we should continue and get down to 46.76, I'll call it, before wave 4 is complete. Now, it may be complete here, but then what that suggests is that the market is going to turn and is going to rally. And is going to rally with some strength. So in other words, if we're going to flip into a minor fifth wave and the direction is higher, then we need to see this thing start to take off without just coming in so meager, let's say. I mean, that was a fairly decent start. Today, kind of got some strength going. We rose up off of this low at 47.36, reached a high at 47.66, where we ran 30 points, but then it absolutely just died. And the market reversed and actually went to new lows. If it is indeed going to remain a minor fourth wave and it starts to rally, it needs to be done with this move. So the C wave needs to be complete, which if I had to, I'd be like 1, 2, and we're in the C wave, 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5. Even though this a little bit sketchy. So, and that's my point as well, that the market is, both the S&P and the NASDAQ are showing weakness. Now, the Russell's kind of like pretty much what I might say is all over the board. In other words, it puts in a decent rally, it drops in, then it's down a chunk, then it comes back, then it goes down. And so it's just kind of floating back and forth, maybe also just putting in a small corrective phase and ending up being more flat than anything else. So we're trying to figure out exactly how we're starting this new year. Obviously, some type of a pullback, but now the determination, as you're going to see in a moment, in the NASDAQ is truly leaning more like the highs are in on the NASDAQ. Now, I will discuss it in the NASDAQ because what that could suggest is that the S&P still could turn and put in a pretty solid rally, get itself above that high at 48.41. Doesn't have to do a whole lot, just needs to get above it, put in that minor wave 5 to complete its run. Now, understanding that the NASDAQ has dropped a great deal more percentage-wise than the S&P, so if we're going to mark it as a minute wave 1 or a minor wave 1 down in the NASDAQ, we would be expecting a minor wave 2, which should produce a very strong rally, by the way. Should be counter trend, but still strong and carry the market higher. And then that could still come into place where, because the S&P actually has a lot less territory to cover to get itself to a new high than the NASDAQ would. Now, what continues to drag down both is this additional downgrade that Apple received. But what balanced it out today was that we saw some strength in NVIDIA, in Netflix, in Meta, and actually for a while even in Microsoft. Now, again, this weakness here and then being pulled and shifted over to another level is being more damaging to the NASDAQ than it is to the S&P, because what's also supporting the S&P is that biopharmaceuticals, or just pharmaceuticals, that sector is truly just been lit on fire, where we're seeing a lot of the pharmaceutical stocks really put in some solid gains. One in particular is Eli Lilly, which is not a part of the NASDAQ, but it is in the S&P. So some of those stocks continue to support the strength that we're seeing underlying as things start to shift yet again. Now, my best count is going to suggest still that the S&P finished minor wave 3, going to put in a minor wave 4, we're going to rally, put in a minor wave 5 to complete the entire sequence, which would include up to and including the primary B wave. So it's primary wave B, intermediate wave C, minor wave 5, done. And then we will start a more, I'm going to say progressive, or just a more consistent decline in the S&P as well. So strange start to the new year, and that we're not seeing it across all the markets, where everything is kind of just turning and heading lower with the same speed and intensity as the NASDAQ has. So how I'm going to leave it here for the S&P, still looking for this downside wave to complete. I think we're close. And so if it's a pullback, it's going to be labeled as a minor wave 4. Then we'll look for that rally. I'll be able to put up additional fibs that'll go along with the rally. So the market still may throw us a curveball here and there. So nothing's really out of the woods yet, and clarity. So we're still, I really am giving it on an hourly chart, a 4-hour chart, a daily chart, the best estimate that I can do right now with what the markets are presenting here. Now, again, that could all change tomorrow as well. We have some additional figures that could just send it over the top. We have U.S. employment reports, the employment rate, the hourly wages, ISM services, factory orders, and at 1:30 p.m. Eastern, we have Fed President Tom Barkin out there again on the stump, maybe to talk about the employment, maybe to talk about how this all fits. Don't know what the guy's going to talk about, but here's something that I wanted to point out as well, that as long as I'm touching the S&P, let's go over and take a look at the 30-year bond. Now, again, 4-hour chart. So this is a pretty nice, strong rally, but it is in a B wave now. If this is wave A, it's in a minor B wave coming off, and that minor B wave can project back towards 118, 116, 114. After reaching 125, almost 126, it can drop all the way back. That's going to produce higher rates. So the yield on this bond, the 30-year, will gain some footing here. And whether that transcends and goes back over to the equity markets, like, we're still talking about just interest rates are going to be cut. Interest rates are going to start dropping. And we just can't say, or I'm not willing to say with clarity, with conviction, oh yeah, that's the case, absolutely 100%, because it's just, I've learned to never say that when it comes to our markets, or particularly with our accounts, basically with these indexes. There are some other things coming on, believe it or not. Once again, the federal government, the Senate and the House, we once again are staring down the barrel of shutting down the government. That's coming up. Don't forget, these have all been just temporary saves. So there are a lot of stuff still out there unresolved, but yet they want to talk about, well, we're fine. We're just going to start cutting rates. So I can't say with any conviction that that's going to be the case. But then again, in the bond market, I am looking for a minor B wave. And who knows? That could bring us all the way down, maybe even all the way back, because if indeed minor wave A was a three-wave structure. Minor wave B could, that's actually wrong. So I will fix that. That should be a C and not a 5. Should be a C. So there's ABC up, and so that could suggest that this will be ABC down, could turn into a flat. We could come all the way back down or close to it, and then rally once again back up into this area to finish that larger intermediate B wave. Now that's the bond. Back over to the S&P. So there's a lot of things that it seems that the market may be ignoring, and maybe they are, but eventually notice will be given. So I would think that we might get a little bit more. On the 4-hour 200 sits at 46.98. That at this stage, to keep a wave 4, yep, it could dip below it to 46.75 because that's the actual support, Fibonacci support. But a break there, a solid break there, could increase the pressure to the downside. Now, again, we're kind of tipping our toes into a little bit stronger oversold readings. So we could put the completion in and then start to rally. Again, the expectation, if we're completing a minor fourth wave, that minor wave 5 should begin with a good kickoff, a kick up. So it should move up without, yes, turning for small pullbacks, but not turning and then heading towards the lows. So it needs to build a rally that is going to be more sustainable and to give us that support that, yep, we put in a bottom for that fourth wave, and now we're heading up. Over in the NASDAQ. And before you get yourself all excited, yep, I had to change it back. Again, I'm going to start in the NASDAQ on the 4-hour chart. Moved it back into line. The NASDAQ continues to break down. That is what, if you're not seeing it, let me just demonstrate what I've left it with to say that what the NASDAQ needed to do, if it truly is reaching a low for a minute fourth wave. All right, so that's what that would have been, because this minute 3 was up here. And we were doing a minute fourth wave, leaving room for a minute fifth wave to take us back above 17,165. Well, we dipped today back down below and got as low as 16,436. I think it's, yeah, 430. Yep, it was 436 was the low. And that came in at, well, from 1 o'clock on, but it came in late in the session. And it's important to kind of feel that, yes, a great deal of this is Apple losing ground. And then today, Amazon, Broadcom, Google ended up joining the party after being, pretty stable to higher early in the session. Later in the session, we just saw more things kind of join in and get hit. And a lot of things like NVIDIA and Netflix came down substantially off of their intraday highs. Now, Apple got another downgrade. So I think it's Piper Jaffray, but I know it was Barclays started, and I think Piper Jaffray came in today and also downgraded the stock on concerns for iPhone sales, on the concern for sales. So it's going to stay interesting, folks. And I'm thinking that even if I'm counting this, bring it all the way down. Let's take a look at the hourly chart. Take a look at here. I'm counting this. It's like 1, 2, and then we got this nicely subdivided 3, 4. Wave 5 is, I think, still got more to go. Now, mind you, the reason that I kind of put this into place, if I take it back out to that 4-hour chart, open it back up again, this is 16,381. Now, having said that, if we start to break down, We're not that far from 16,400. I can imagine it's going to tick and possibly do a really quick jar down because of stops, maybe. I don't know. But I think if we're now below the 4-hour 200. We came back up and gave it a little smooch this afternoon and then dropped back down. So again, remember, if a market is finishing a fourth wave or a decline, or in this case, yes, a decline, the expectation would be for the next move, the wave, to begin to build and move higher and not turn around and head back towards the low before it continues to build on the rally. Normal smaller pullbacks notwithstanding. Nothing goes straight up, so it goes up, it pulls back a little bit and continues higher. And that also is a signal that in this case, the buyers are stepping back in and they're supporting higher, they're support and moving higher. In other words, it's like their impression is that we're done. They have some support to come back in and say, we're going to step back in. We're going to start buying Apple. We're going to start buying all of the stocks that have been kind of swamped and hit and rebuild this rally. Because indeed, if it's going to be still a fourth wave, then this thing needs to gather some steam and it needs to start to move, get above the 200, get above the 8, get above the 20, get the 100 and the 50. I mean, it needs to do that pretty quickly. And that 50 is sitting at 16,913. So it is now pointing down. The 20 is pointing sharply down. The 200 is cruising and now getting flat. So it's not really lining up for, oh, well, we're just going to go flat, provide a little bit of resistance, but we're ready to turn and go higher, if like the 20 and the 50. They're turning and now being more reflective as to what the market is actually doing. So I am now feeling that we've got additional downgrades for Apple with additional calls for 160. So today it did trade under 180. In fact, I'll just double check to see what that low was in Apple today. 180.88. So again, I haven't really looked at a chart of Apple. I can. I know a lot of people always want to totally compare the NASDAQ to Apple, but you can see here as well. Let me just take that back because I want to show you. Okie dokie. Let's try it this way. 3, and this was a 4. I'm looking for the 5, and guess what? Barely, but it did make a new all-time high. Didn't get to 200, but it got dang pretty close. Got dang close. And that high was 199.62. And then it just started to come off. And now this is very steep. This is third wave-ish. So we got if we're coming down in a 1 and a 2, or 1, 2, and a bunch of 1, 2s, and then boom, that center section, that 3 of 3 type of a move, slams the stock, brings it down all the way. Got one little rally, and then they took it right back down again. So even when Apple catches a rally, it catches up with itself and then returns, and the sellers move back in. So Apple's not presenting a picture to me like it's going to get ready to turn. In fact, even if I had to put something, I mean, look at where 160. 160 is below where the low of wave 4 is. So if I'm going to pull out to the daily chart and we're just taking a look at this, if this is 5, well, that's going to be support, first support. But what are we finishing up here? A 4, we're finishing an intermediate degree 5. So what comes next? I mean, I can keep pulling out to see where Apple really is. Yeah, it's intermediate. And then what comes after that? Is it really finishing a primary 5th wave? So Apple's getting ready to really start to take a larger tumble here and maybe end up back at this low, at the area of this low, previous 4th, right? Previous 4th. If this is finishing some type of a primary degree, and it's going to start to pull back. Its first line of defense in terms of support is the previous 4th wave. So I can't, 160 is the first call for downside. Again, that's Apple. And Apple, what do I read today? Where Microsoft is on the verge of taking over first place in terms of most valuable corporation. So back to the NASDAQ. There's stuff going on. And it doesn't mean that we'll never rally, because that just would be absurd. I do believe we will rally. But if we're coming down and we're finishing 1, 2, 3, 4, and we put this fifth in of minute degree, which is how I'm counting it, then it's going to be minor wave 1, a minor wave 2, at least 618, if not higher. So, we're looking for let's just take a guesstimate. We're looking for, that's the high. And let's say that we do get to 60. Well, I'm going to use this low. Come on, give me that low. Right, 618, 16,886. That's a pretty fair piece. It's a 400 point rally. And you would expect it to go pretty straight up, because we've had other second waves where it's just like, wow, looks pretty good. Like just straight to the moon. And really, second waves, can be very deceptive as well. But 50% to 62%, that would be the pretty normal for a wave 2. And that would take us back above. Look at the 1 hour chart of the NASDAQ. Look at that 50. Look at that 20. Just like cruising south. And the 200 has turned, going flat for a second. The 100 cruising lower. These are simple moving averages, but they are heading sharply lower on the 1 hour chart. Not real picture perfect for the market to turn and put in a strong rally, is it? So I'm leaving it as that. I'm looking for a little bit additional downside. We should find that support. I believe we have 16,431 would be one area, but then we have that 16,380 area again. And once that is broken and we drift even further lower, let me open this back up so we can just take a peek. We have this support level here, 423, and 431 to 423. Then we have 381, and then it just keeps ticking lower. And we have support down here at 15,909. Now, if that, we have support down here. We have support here. This is price support, 16,100. That cooks the goose, so to speak. But we're looking for now an area where the market might find some support to put in wave 1 and give us a wave 2. So I'm going to leave it all right there. Tomorrow is an expiration, like I mentioned, just before we have economic data in the morning, starting at 8:30 a.m. Eastern. U.S. employment data, that's the employment report, the unemployment rate, the hourly wages, etc. 10 a.m. ISM services and factory orders. And then 1:30 we have a Fed President Barkin out there speaking. So have a great trading day tomorrow. And I will again probably try to put on a big picture update over the weekend. A lot going on in the markets. Let's see how expiration treats the market tomorrow or not, and then how the market ends up. So we're heading into the second week of the new year. And so I most likely will try to get a podcast done, big picture technical update done over the weekend, and the next Elliott wave update will be on Sunday, January the 7th.